In this video, I will tell you everything you want to know about leveraging your infinite banking tax-free cash growth warehouse account with policy loans. Infinite banking takes advantage of the special circumstances and available options that are inherent with the cash-rich designs created for the strategy with participating whole life insurance policies. And the central process to the whole infinite banking tax-free cash growth warehouse strategy is the leveraging of the cash value of your accounts. That is done by taking policy loans. So how does that work? And what is the process and timeline with and for policy loans? Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. If you find this video to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here, okay? Now, so your account is designed for maximum cash value and growth. The policy has been issued and you've paid your first annual premium. You can set up your account to pay premiums annually, semi-annually, quarterly, or monthly. And you can change that mode whenever you want. For expediency, I'm going to use the annual mode here for this example. Let's say you want to utilize the personal monthly expenses sweep strategy with your infinite banking tax-free cash growth warehouse account. So your account was designed to have enough cash value right at the start so that you'll be able to use that strategy right out of the gate. If your personal monthly expenses are at $5,000, including mortgage or rent, utilities, gas, food, insurances, etc., then you'll want to have at least $5,000 available in the cash value at the start. That being the case, the account will have been set up so that the premiums for the riders will load the cash value to at least $5,000. Real quick now, if the premium for the base whole life is $2,500 a year, the term rider premium is at $2,500 a year, the scheduled paid up additions rider is at $2,500 a year for a total of $7,500 per year, and you pay that full annual premium upon issue of the policy, that should provide at least $4,500 in cash value, or about 60% of the first year's premium right away. That's not quite enough, though, to work your personal expenses sweep, which you need $5,000 for. So you'll need to add a one-time additional paid up additions rider in the amount of about $1,000. Altogether now that should make about $5,300 available in the cash value. The first question is, how long do I have to wait until I can take my first policy loan? Well, the answer is as soon as your premium clears your bank, usually about 3 days. So your policy is issued, your premiums are paid. 3 days later, barring weekends and holidays, you should be able to initiate your first policy loan for up to 95% of the available cash value. Now you have three options to initiate your policy loans. One, you can call the provider's service line and initiate the loan over the phone. Two, you can initiate a policy loan through your personal account webpage. And three, you can have your agent request the loan for you. Now, you may need to sign and submit a form documenting your request for the loan and the amount of the loan, but it's a very simple form and it can be faxed or emailed to the provider. Very simple. Depending on the time of day or the time and the day the request for the loan is received, the loan will be initiated the same day or on the following business day. You can have the funds mailed to you by check, or you can have the funds deposited electronically into your bank account. Direct deposit is usually faster. The provider will tell you that the loan will be completed within 7 to 10 days. But in my experience, it's never taken more than 5 days. But we had our first personal policy loan issued by check and mailed to us. And that time it took 5 days. Every time since, we've had the funds direct deposited into our bank account. Usually takes 4 or 5 days. Last time, it was in our bank account just 3 days. Now, in this example that we're using here for this video, with a brand new account and the first premium being paid, from the paying of the first premium to having your first policy leverage loan funds in your hand or in your bank account, a total time lapse would be as short as 7 days to a maximum of 14 days. And that would be if it took 4 days for your premium deposit to clear your bank, and then the maximum of 10 days for the loan to be delivered. Again, we've never had to wait more than 5 days from the time we requested a loan to the time it was in our hands. Now, here's how the interest is calculated and charged on your loan. First, it's simple interest on an annual basis. So if the interest rate is 5% annual on a $5,000 loan for the total of the year, the interest will be $250. The interest will be prorated per month. So if you were to make a payment on the principal of the loan after 2 months, interest in the amount of $41.66 will be charged on the loan. If you paid $1,000 on the principal in month 2, that would reduce the principal to $4,000 and reduce the interest charge going forward to just $16 a month. If you didn't make another payment on the loan for the whole rest of the year, you would receive a statement prior to the anniversary of the loan stating the remaining principal, in this case $4,000, and the total interest charge for the year, in this case $201.66. The interest will be due and payable at that time, but you aren't required to pay the principal. Of course, for utilizing the tax-free cash growth warehouse personal expenses sweep strategy, you would pay the entire loan off the month after taking the loan, then take another loan for the next month's expenses. In that case, the maximum interest due would be just $20. And that'd be the max, probably zero, depending on when you repaid the loan and then initiate the next one. But you could do this and never be charged any interest on the loans at all. But if you were to wait 2 months and then pay $1,000 against the loan and not make another payment the rest of the year, as in the example I just gave, as I said, interest on the loan would be $201 for the year. And at the same time, your cash value would have grown by $318 at the current dividend interest rate of 6%. Pretty sweet, huh? For more on the tax-free cash growth warehouse personal expenses sweep strategy, we have another video here on this channel in the TFCGW applications playlist titled Pay Bills and Pay Yourself with the Same Money, which gives an overview of the strategy. And then there's a chapter in this book, Tax-Free Cash Growth Warehouse Nuts and Bolts, which goes into more detail, available on Amazon.com. Now, again, if you have found this video to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone call with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you. So for now, aloha and mahalo for watching.